For joining. We're just going to give people a couple of minutes to join in. So in the meantime, please feel free to grab a drink, grab a cup of tea and get comfortable, and we'll make a start in a second. Okay. Hi, everyone. Let's make a start. Couple of housekeeping bits before we start. So we can see everything that you guys put in the chat, but other attendees can't. So please feel free to keep the questions coming in, and we'll get to them as we get to the Q&A part of the session. Important thing to note is if we don't get to your question live, we will get back to you via email afterwards. And also towards the end, you will also see a feedback form that I will remind you all of later. If you could please spare a couple of minutes just to go through it, that would be much appreciated, just so we know your thoughts and what you'd like to see next. Okay. So, quick introduction about myself. I'm Annie. I've been in the consultancy world for coming up to 3 years now, and before that I worked for a large ERP provider. So I've spent quite a lot of my career around financial processes, around closing. So that means that I understand kind of what works, what doesn't, and where organizations tend to typically struggle. So great to have you guys with us today. Quick intro to your speakers today, who are experts in their field. So we've got Presley and Simone. So Presley is a senior manager out of our London office who leads our Qlik practice globally. Presley comes from 15 years worth of consulting experience and has been delivering enterprise scale data projects across different industries and functions. And then Simone has been a part of BIOS and has been with us for coming up to 2 years now. And he brings experience from both consulting and corporate environments, where he led quite a lot of the business intelligence and wider data strategy initiatives. Okay, I'll keep this quick. So what we're going to be covering today is a quick overview of BIOS management, just to set the scene of who we are and what we do, for those of you who may not know us. We'll then touch on what financial closing is looking like nowadays and what people tend to struggle with. Then we'll look at some solution enablers that can support you. And then we'll also look at what that looks like in action, as visualization is very important. That word is always so hard for me to say. And then we'll wrap up with a Q&A at the end. So please, like I said, keep those questions coming and we'll get to them throughout the session. Okay, so a little bit about us. So for those of you who may not know who we are here at BIOS Management, we're a consultancy firm with over 20 years worth of experience, helping organizations improve performance through stronger processes, better data, and practical digital solutions. There's about 250 of us globally, and we've delivered over 1,800 projects across over 600 customers. I like numbers, and I think this is quite a big achievement for us, if we do say so ourselves. So what we do is we combine advisory, analytics, and digital implementation under one roof. So instead of having one provider dealing with the strategy and another one dealing with the implementation or execution of everything, you have everything under one roof and a single partner that stays with you all the way through until you have a solution that works for you. Another thing that's really worth noting is that we operate across Europe, US, and APAC. So we support international organizations whilst also remaining flexible and tailored. Okay. Quick note about our customers. As you can see, we work across various different industries, and this isn't even limited to this slide. So across all of these sectors, financial closing challenges tend to look similar. So we're all kind of from the same realm here. And today is really about looking what and how we can address financial closing challenges with the help of Qlik and, of course, AI. So With all of that in mind, I'd love to pass you over across to Presley and Simone, who will be leading today's session. So Presley, over to you.
Yeah, thanks, Annie. Good morning, good afternoon to all. As Annie mentioned, I lead Qlik here at BIOS. And after Annie's great introduction, and now that you know who we are, let's talk about why we actually here today. And it starts with something that every finance team knows very well, which is the financial closing. Okay, let's get a little bit into what it actually is and why is it important more than ever. Hopefully we do have a lot of financial experts and teams on the call, but for anyone not familiar, we'll just do a quick summary of what it actually is and why it's important. So financial closing in a nutshell, it's the process of finalizing an organization's financial records at the end of a period, recording those transactions, reconciling accounts, adjusting entries, and consolidating entities in order to produce the financial statements. Why is this process actually so important? Because the close is not just a compliance exercise, it's the foundation for every strategic decision, forecast, and investor narrative that follows. CFOs are increasingly expected to deliver real-time insights, not rear-view reporting. And the close is where data quality, trust, and speed either enable or block this ambition. So before we continue talking and showing a whole lot more slides, we're going to take a quick pause to introduce a quick poll. Because one key observation that we have seen is that when it comes time to closing, a lot more time is spent on actual preparation of these reports and this insight as opposed to the actual analysis. So we're going to run a quick poll now to actually understand how great of a time that actually is. So we'll give this a couple of seconds just for everyone to put in their answers. I see some coming through already. And then we'll touch a little bit on the results. Okay, maybe another few more seconds. No pressure, it's not a test. I'm not going to call out individuals if the answers are wrong. Okay, so we've got a few answers in, and I think the answers are fairly spread across various different of the options. To sort of quantify the impact of this, research actually shows us that around 70 to 80% of time is spent on preparation. And as you can expect, this doesn't really leave much time for your teams for actual analysis or business improvement. So one key call out here is that it is a fairly high number. Okay. Let's move on. So now let's deep dive into some of the factors that are actually causing these pain points. Most finance leaders we speak to already know that there are problems in their closing cycle. The question is, where do these problems actually live? And the first challenge we see is around data quality and consistency. When data enters the closing process with inconsistencies, missing values, or formatting differences across different departments, the finance team becomes a data cleansing operation rather than a strategic function. Poor upstream data quality cascades downstream into unreliable reporting and forecasts. Number two, manual spreadsheet-driven processes. So finance team still spends roughly 70 to 80% of their time extracting and preparing data, leaving only a fraction of their time for actual analysis, as we just saw in the previous poll. Manual journal entries, reconciliations, and data consolidations are error-prone and slow. Nearly 90% of close-related errors go undetected until after the books are shut. Challenge number three, so time pressure versus accuracy trade-off. What we find is less than 20% of companies actually close their books within 3 days, whereas the rest of the time and resources are held up by growing complexity and reg requirements. Strict deadlines forces teams to choose between thoroughness and timelines, a trade-off that shouldn't exist in today's world. Going on to challenge number 4, so fragmented data systems and data silos. Growth through acquisitions, multiple ERP instances, and disconnected third-party tools create a patchwork of data sources. Reconciling across these systems requires manual workarounds, copy and paste workflows, and inconsistent methodologies, all of which introduce risk. And last, but certainly not least of these challenges, is the strategy gap. What we are seeing is that approximately 83% of CFOs view finance as a strategic growth engine, yet only a fraction of that, roughly 4% of their teams, spend even half of their time on strategic work. The closing consumes the very people and hours that should be directed toward insight forecasting and business partnering. The result? Finance teams are now stuck in a reactive cycle, racing to close, fixing errors, and running out of time before they can actually do the work that actually moves the business forward. So one question to ask this group is, what challenges is keeping you and your team reactive? As Annie mentioned, we have a poll running in the background that's not viewable to the rest of the audience, so feel free to post some of your challenges that are you experiencing with your teams and your organizations that we could potentially discuss at the end. Okay, moving on to how we can actually start reimagining the financial closing with Qlik and enabled by some of these AI capabilities and features, right? So Qlik as a tool and a platform provides a complete end-to-end platform to support your data and insights journey. Whether it's from data preparation and governance to analytics or AI, all of this is supported by a flexible data movement approach, allowing you to move data securely between almost any source to target. Our financial closing processes use Qlik to achieve this across 3 distinct lenses. The first one being a one connected truth. All your financial data, general ledger adjustments, account mappings are all in a single environment. No manual reconciliations across these systems, and more importantly, no copying and pasting. Data flows in once and all in the right place. Number 2, a guided control process. Closing is no longer a sequence of emails and Excel files. It becomes a structured workflow. Setup, adjustments, validation, output. Every step is tracked. Every adjustment has a reason. Every anomaly is flagged before it becomes a problem. And then lastly, AI that thinks alongside you. When data is clean and the process is structured, AI can do something meaningful, whether it's detecting anomalies, explaining variances, or drafting the first version of your monthly commentary or reporting. The team stops chasing numbers and starts interpreting them. Ultimately, the question then becomes, or does not become, did we close the books, but rather, what does the close tell us about where we're going? Okay, in our solution, we're covering the full end-to-end cycle of our closing process. Whether this is data entry and write back built directly into your analytics app, which removes data duplication and error-prone manual steps, to industry-leading analytics capabilities, allowing you to not only explore and analyze, but more importantly, take action. And lastly, we use AI for automating tasks like anomaly detection and commentary. All of this results in 3 key things. 1, you've got a single unified platform. You've got 3 powerful capabilities and 0 gaps in your closing process. Breaking this down visually, in the following diagram, you can see source is ingested directly into Qlik, where we've got row-level updates, and write back is performed directly within your Qlik app through approved third-party extensions. Qlik's native platform provides industry-leading analytics and insights, while popular LLM technologies integrate with Qlik through the MCP to provide the intelligence. Okay, and now let's bring in Simone to show us how these apps actually look and work.
Okay, thanks, Prensley, and good afternoon, everyone. So let me just load the demo up. Okay, so welcome to the demo section of today's webinar. Before we dive in, let me give you a quick orientation of what we have built here. The closing process is structured around 4 sequential phases, all visible directly from the homepage. We start with the setup and data loading, where we configure the closing parameters and bring in the accounting data. We then move into the adjustment phase, where the team can insert, review, and validate any manual entries needed before the close is final. From there, we navigate into the analytics layer, which is split into 2 dedicated areas, profit and loss analytics and balance sheet analytics. This structure is not accidental. It mirrors the way a finance team actually thinks and works through a closing cycle, from raw data to validated output to strategic insight. And as you'll see, every step is connected. Setup choices flow into adjustments, and adjustments flow straight into analytics. Now, we are going to show you today, what we are going to show you today is a focus walkthrough of this flow. There are many additional capabilities built into the platform, such as variance allocation, cost center analysis, intercompany reconciliation, or management versus statutory closing alignment, that we won't cover in this session, but they follow the same exact logic and the same architecture. For today, we want to give you a clear end-to-end picture of how the core closing cycle works. So let's start. And the first step in any closing cycle is configuration. Here, the finance team defines 2 critical parameters for the month being closed. The first is the closing month itself. In our example, we are closing March 2026. The second parameter is the closing date, in this case, the 9th of April 2026. This is the date on which the accounting data is considered frozen. Setting this date ensures that the closing process runs on a stable, consistent snapshot of the general ledger, not a moving target. Finally, you'll notice the closing complete flag. This is a process control mechanism. Once all the steps have been executed and validated, the flag is activated to formally mark the period as closed. It's a simple but important governance element. It tells everyone on the team and any downstream system that this month's closing is done. The entire screen is editable directly within the application, powered by our data entry layer. No external spreadsheet, no email, no back and forth. Now, let's have a look at the second setup screen, the account settings. This is the intelligence layer of the closing application, and it's worth spending a moment here because it underpins everything that comes after. What you see is the full chart of accounts, every general ledger account the company uses, along with 2 key mappings that we can configure once and reuse every month. The first mapping table is the P&L reclassification. Each account is associated with a specific line in the income statement. This is what allows the application to automatically build a clean, structured P&L from raw general ledger data without any manual aggregation. The second mapping defines the balance sheet impact of each account, whether it affects asset or liabilities and equity. This becomes particularly important when we get to the adjustment phase, as you see in a moment. The power here is flexibility. These mappings can be updated over time. If the company changes its chart of accounts, acquires a new entity, or restructures its reporting categories, the configuration adapts without rebuilding the entire application. With the setup complete, we move into the data loading. And this is where the actual accounting data enters in the picture. What you see here is the ledger, the general ledger, presented by reclassification and by individual account. The columns represent the months already closed, January and February, and the current month being closed, March 2026, highlighted in green. The layout immediately gives the finance team a comparative view. How does this month look relative to the month before? Are there any accounts that behave differently? Are there any missing value that shouldn't be missing? And in fact, this is exactly the kind of signal that jumps out here. If you look carefully at the SG&A section, we can see that two accounts, insurance and office rent, show no value for March, 0. In January and February, they had regular posting. In March, nothing. This could be a legitimate situation, or it could be a missing accrual, a journal entry that simply wasn't posted. The application makes this visible immediately without the need to manually compare period over period in a spreadsheet. This is where the closing process shifts from passive reporting to active control. So let's act on what we just found and move into the adjustment page. This is the core operational area of the closing process, the place where the finance team makes the adjustment needed to bring the accounting data to its final reportable form. In our case, we are going to insert an adjustment for the office rent account. The monthly amount is, let's say, 90K. And we set the date to March 2026. We can add a note to the document to document the reason. And we flag the effect on balance sheet checkbox. Save and recalculate. That flag is important. When activated, the application uses the account mapping we configured in the setup phase to automatically propagate the adjustment not just to the P&L, but also to the balance sheet, to the correct asset or liability line. No double entry required from the user. The logic is already embedded in the configuration. Once we save and recalculate, the adjustment is immediately incorporated into all downstream analytics. I want to emphasize something here. In this demo, we are inserting one straightforward accrual. In practice, the adjustments layer support a much broader range of operations, such as reclassification, provisions, intercompany elimination, currency adjustments. Any entry that needs to sit between the raw general ledger and the final reported figures lives here, fully tracked and auditable. After inserting our adjustment, we can validate the result on the adjustment check page. This view combines two data sources side by side, the original general ledger figures and the adjusted figures, account by account, period by period. The finance team can immediately verify that the adjustment landed where it was supposed to, in the correct amount, on the correct line. This is the quality gate before analytics. Only when this check is satisfactory does the team move forward to reporting. Now, we are in the analytics layer. The closing is done. Let's look at the result. The P&L statement gives us the full income statement in a structured multi-column layout. We can toggle between monthly view and cumulative year-to-date view. And for each period, we have three lenses: actual, budget, and prior year, and the variance and percentage deviation. This immediately answers the two most important questions finance team ask every month, how did we perform versus plan, and how does that to compare to where we were a year ago? The statement covers the full P&L structure from net sales through gross margin, operating expenses, EBITDA, and down to net income. Every line is clickable and explorable using Qlik's associative engine, which means you've never more than one click away from the underlying detail. Beyond the tabular view, we have the P&L dashboard that gives an immediate visual reading of the business. At the top, the key KPIs for the period: revenue, cost ratio, gross margin percentage, product gross margin, and OPEX weight. Below, a trend chart showing the evolution of sales split between product and services revenue, alongside the gross margin percentage line across all close months. This view is designed for speed. A CFO or a finance director looking at this page for 30 seconds should be able to understand whether the month was in line with expectation or not, and where to dig deeper. The third P&L view is the waterfall. This is one of the most effective tools for communicating financial results. It shows step by step how the net sales translates into net income and which components along the way had the greatest positive or negative impact. Each bar is a waterfall is interactive. Clicking on it opens the detail of the individual accounts that make up the aggregated figure. So if operating expenses or SG&A look higher than expected, you are one click away from knowing exactly which cost line are driving that. The final analytics section covers the balance sheet. We have here 3 dedicated views. The first is the balance sheet statement, the full balance sheet in tabular format, again with multi-period columns and the ability to compare across periods. The second is the dashboard, which visualizes the composition of asset and liabilities and equity as proportional blocks, making it immediately clear how the balance sheet structure is shifting from one period to the next. Total asset, short-term versus long-term, equity weight, all visible at a glance. The third view focuses on net financial position, tracked month by month. This is a critical indicator for any CFO, monitoring liquidity and debt exposure, and having it built directly into the closing application means it's always current, always based on the same validated data. The last step in the closing workflow is communication. Once the numbers are validated and the analytics reviewed, the application allows the team to send a PDF report directly from the platform. From P&L statement page, you click Send Report, enter the recipient email addresses, confirm, and the closing summary lands in the right inboxes without any manual export or formatting. This small feature carries more operational weight than it might seem. It eliminates one more manual step at the end of any complex process. And it ensures that what gets distributed is exactly what was validated in the system, nothing more, nothing less.
Thanks, Simone, for that deep dive into the application. I'm hoping for the audience that we have on the call, it sort of brings to life some of the challenges that we mentioned early on in the presentation, but also some of the ways that we've worked around these to make it a bit more intuitive, a bit more governed, a bit more trusted, and a bit more efficient. I think a couple of call outs there for me that stands out is having that full integration end to end from data entry all the way to analysis, and even what you just showed around reporting. I think having full transparency in one platform eliminates a lot of the risk and challenges that we just saw in one of the previous slides, right? Specifically around duplication of offline files, entries sitting outside of this platform that then needs to be brought in, and all the other sort of technical challenges and nuances that comes with working with multiple different formats or versions of something, right? So yeah, thank you for that.
Yeah, you're right, Presley. Thank you. But we can say that even with a great application, someone on the finance team still has to do all the interpretation work every month. So spotting anomalies, writing commentary, and building the final report. And that takes a lot of time and mental energy.
Yeah, I agree. And I think that's one of the typical use cases we hear and see around how AI can be introduced to help with some of these repetitive tasks and try to reduce time even further. So it'll be interesting to see how our app with the use of AI now solves for that.
Yeah, let's load up the part 2 of the demo.
What you're looking at now is still the same Qlik environment we have been working in. Nothing has changed, same application, same data, same session. The only things that is new is this panel, the closing assistant. This is where the AI enters the closing process, and the way it answers, it's important. It doesn't replace the application. It doesn't open a separate tool. It doesn't require the finance team to switch context. It sits directly inside the workflow with full access to the data that's already been loaded and validated. For this webinar, we have chosen to work with Cloud, developed by Anthropic, one of the leading AI models available today, but the architecture we have built is model agnostic. The same process can run with other large language model, GPT, Gemini, or others, depending on the client infrastructure or preference. The AI is a component, of course, not a constraint. What drives the process is something we have built ourselves, the custom skill called BIOS closing. Think of it as a set of instructions that tells the AI exactly what to do during the closing cycle, which checks to run, in which order, what to flag, and what to produce, and at the end. These steps are configurable. Different clients have different closing processes, different levels of complexity, and different reporting requirements. The skill adapts to that. Let's activate. The prompt is simple. Help me close March 2026. And from here, the AI takes over. The first thing that AI does is run the general controls, what we call the balance checks. Before any finance team can trust the numbers in their closing, they need to verify that the accounting data is internally consistent. Asset must equal liabilities and equity. The net income in the P&L must reconcile with the earnings movement in balance sheet. These are fundamental checks, and they're also the kind of checks that, when done manually, take time and are easy to get wrong under deadline pressure. The AI runs them in parallel immediately and presents the result clearly, which checks passed, which failed, and why. Where something doesn't reconcile, it flags it with enough detail for the finance team to understand what needs to be investigated without drowning them in technical output. In our case, 2 checks come back with issues. The AI notes them, explain what they indicate, but we decide to proceed to the next step anyway, because the P&L itself is internally consistent. Step 2 is anomaly detection. The AI analyzes every account in the general ledger for March and compare it against historical patterns from the previous month. It's looking for 2 types of issues: accounts that should have a value but don't, for missing recurring entries or things that simply were never posted, and accounts whose values are statistically unusual compared to their own history. The results come back structured and prioritized. Missing entries are identified with a suggested adjustment amount derived from recent averages. Outliers are ranked by how far they deviate from the expected range, so the finance team immediately knows what deserves attention first and what can be reviewed later. Once the analysis is complete, the AI doesn't just report findings, it acts. It prepares the suggested adjustment, and through the interaction with the data entry layer, inserts them directly into the application. And here's the result. We are back in the Qlik adjustment screen, the same one we saw in the first part of the demo, and the adjustments are here, all of them already populated: account, amount, date, note explaining the reason. The AI has completed the task that would typically require a finance team member to manually investigate each anomaly, decide on the correction, open the entry form, and input the data one by one. This is what we mean when we talk about the AI that's built into the process. The loop closes back into the application, the data is clean, the closing can proceed. This is the output, a complete monthly closing report, branded, structured, ready to be shared with management, executive summary, revenue and cost analysis, profitability, actual versus budget variance, 6-month trend, and a section dedicated to key risk and attention item for the period. What we have just seen is not a concept. It's a closing process that runs today in production for our clients. The finance team defines the rules, the AI executes them, the platform connects everything together. And at the end of the month, instead of spending days gathering data, checking figures, writing commentary, and chasing sign-offs, the team has a validated, documented, and distributed closing report, and the time they have recovered goes back where it belongs, on analysis, on decisions, on the work that actually moves the business forward.
Okay, perfect. So we have seen the end-to-end closing process. And before we move on, we'd love to hear from you directly. So, okay. We have just shown you some core capabilities: adjustment recommendation, automatic generation of the closing report, and the possibility of a collaborative close. So the question for you now is, which of these capabilities would make the biggest impact for you and your team right now? Please take a moment to answer to the poll that you should see on your screen. It will only take a second. Okay, I can see something. Thank you. And it's interesting and useful for us to have all of your answer. And so now, before we go to Q&A, let's take a step back, because now the natural question could be, why BIOS management? So let me tell you what makes our approach different. We have basically 3 main reasons. The first one is that we have 20 years working inside the finance processes. We have built closing cycles, consolidation, planning models, and we know what a controller and a CFO actually need at a month end. Second, we have taken Qlik, that's already one of the best analytics engine on the market, and extended it where finance needs more. So structured data entry, guided workflows, and validation. Things that Qlik doesn't do natively, but that are required in a real closing process. And third, the AI we have shown you today isn't a generic chatbot layered on top. It's a purpose built for closing, trained on the logic of how a finance team actually work. That's the combination. So financial expertise, the right platform, and AI that's built into the process from day one. Now we can move on with the Q&A part.
Yeah, thanks so much, both. That was really insightful. I always enjoy watching and hearing you guys speak about this. So really appreciate you taking us through all of that. Thank you so much to those of you who have actually added in some questions in the chat. That's really appreciated. I've got a question that's come in. So we've got a question that says, you demonstrated with Claude, but does that solution actually work with models such as ChatGPT or Gemini or any others?
Okay, Annie, I can take this one. So the answer is yes. So the architecture is model agnostic. Of course, Close is our current choice because it's performing well, but the integration layer we've built, so the MCP protocol and the BIOS closing skill can be connected to other LLMs. At the end, the model is a component, is not a constraint, and the choice depends on the client's infrastructure and preferences.
Okay, very nice. Thank you very much. And then another question. So how can finance teams trust the adjustments generated automatically? Is there a human review step or anything like that?
I think I can take that one. Short answer is definitely, and that's by design. I think with any AI-infused process or capability, human in the loop is important more than ever. So in our cases and solutions specifically, the AI element would propose the necessary adjustments, but it's ultimately the finance team and reviewers to approve and actually confirm this. Adjustments and any type of reconciliations are recommended proactively to the controller or wider finance team, and that team thereafter has the options to modify or reject them entirely. So in our demo and in our solution, AI is used to accelerate the work, but importantly, should not bypass it. I think accountability overall remains with the finance team.
Okay. Okay, very quickly, we've just had one final question come in. So for clients who are already using this solution, what's the most tangible result that they've seen so far?
That's a good one. I can probably cover that as well. So I think what we've been hearing and seeing, the most immediate impact is obviously the time saving and the efficiencies. If you caught a lot of the stuff that Simone showed in the demo, a lot of the items being in a single platform or a single space saves you a lot of time, and then built on a lot of automations thereafter and governance, that time and efficiency is further accelerated. But another really important feedback that we hear a lot is around not so much around the speed, but also around the confidence. Like I mentioned previously, having all of this under one trusted, transparent, and traceable platform, you have much more consistency every month. And sometimes reliability is what they value most, and it's a trade-off on time. So yeah, again, a combination of time and confidence is what we are seeing the most.
Okay, thank you very much, both. I'm just a little bit conscious of time. I think we'll start wrapping up here. So just as a quick reminder, for the questions that we've got in the chat that we've not necessarily gotten to today, we'll get back to you on those via email. And then if you've got any specific questions to Presley or Simone, you've got their details just up on the screen there. So please feel free to drop them a line or anything like that. Another quick note is for those of you who are attending Qlik Connect next week, that's come around really, really quickly. We are an Emerald sponsor, so please do come say hello to us if you are around. And yeah, hopefully can make a start on some conversations as well. And one final point is I'm going to launch a feedback form. So if you could please take a second It will come up on your left side of your screen just there now. If you could just please take a couple of minutes to let us know what your thoughts are on this webinar or anything like that, that would be much appreciated. Any other questions, again, please feel free to get in touch. And yeah, thank you all very, very much. And hopefully we'll see you on the next webinar. Have a great week, everyone.
Thank you.